So, in our last podcast, we recapped everything that we experienced this past year, which we love to do because
It's fun.
it is fun. It's nice to see where you've been, right?
Right.
But my favorite thing to do is to see where we're headed. So, we're going to be talking about 2025 predictions.
Cool. Predicting things because you don't have to be right.
Yes.
And I've proven that in the past.
You have proven that in the past. Actually, last year you predicted rates were going to come down for the year. How did that prediction go, and what do you predict for rates in 2025?
Wow, it really hit me hard right from the start, okay?
You kind of set me up for it, though.
I know I did. Well, I was very wrong last year, okay? And I will admit this because it happens.
Yeah.
But I predicted rates would come down sooner than later, and I failed to realize a couple things. One, the economy, the perception of the economy doing well. Now, granted, we found out in retrospect that we were overstating jobs growth by 800, almost 1 million jobs. And a lot of the new jobs created were governmental jobs and all these things, but it doesn't matter. Rates came down a little bit. Mm-hmm. They did. They started to come down and track in the right direction over the summer, like before summer. And then they went up, right? And it's funny because they went down going into the September Fed meeting where they had I don't want to say a surprise cut.
Right.
They had a 50 basis point cut to the federal funds rate, which is not a direct impact on the mortgage rates. And the rates went up consistently since September through the end of the year.
Yeah.
So that, I was wrong on that prediction. I predicted that rates would come down, and I was wrong. I'll say that again. I was wrong.
First step is admitting it's okay.
And now we have a different climate. We have a different environment. And, I think a lot of the people were wrong on rates coming down. A lot of people were wrong on this. And looking forward to 2025, I'm confident the rates are going to come down. But we've created this new normal.
Yeah.
The 6s and 7s were our reality. We had some pockets of 5s. Mm-hmm. I love the 5s. Mm-hmm. 5 is awesome. Yeah. Right? 6s are great.
5 for 2025.
5 for 2025. And, this year, again, a lot of the talking heads are predicting rates to be go from the 7s to the 6s to the 5s, and pushing that into 2026. And I've said this a lot. I've said it many times. Until the cost of energy comes down, rates are going to stay high. Mm-hmm. And we have a new administration coming in. I'm not getting political here. I don't care who you voted for. The reality is that this administration is very friendly to the factors that drive down energy costs. Mm-hmm. And so if energy costs come down, we see gas and oil come down, that costs everyone less money to do everything. There's nothing that gas and oil aren't a product, included somewhere along the way. Whether it's, if you order something on Amazon, not to plug Amazon, but if you order something on Amazon, they have to ship it to you.
Right.
The driver has to get in their vehicle and drive it to you most of the time, right? Mm-hmm. That costs extra money. If the gas prices are high, it's going to cost more than delivery fees. Manufacturing that product, there's a lot of oil involved in a lot of the crap that we buy. Plastics, right? Plastic is made of oil. So oil and energy is involved in every single process. So long story short, I do believe the cost of energy is going to come down. Mm-hmm. And I do believe that mortgage rates will benefit because of the lower cost of the things we buy, which brings inflation down, which will lead to lower rates. So I do believe strongly that we will see an impact to rates in 2025.
Awesome. That's looking good. So with that being said, what happened to home prices, not rates, home prices this year, and how are those home prices expected to change for next year?
Well, this is another interesting point. For the last 3 years, since 2022, 2023, and 2024, everyone was saying, our clients, a lot of them were saying, look, I'm going to wait to buy. Well, why are you waiting? Why are you waiting? Well, I think home prices are going to come down. What makes you say that? Because everything I'm looking at says home prices are going to stabilize and go up, despite rates being as high as they in, and home prices stayed very stable. They actually went up, depending on which market, about 3% last year. That's normal. Mm-hmm. 20, 30, 40% is not normal.
Yeah. 3%
is a normal rate of appreciation, which I would love to see that continue, right? So I believe home prices will rise. I think I think we saw we're talking about inventory. I'll jump to that. Inventory influences the price. If the demand is constant and inventory continues to fall, prices will rise.
Right.
That's supply and demand. And so a lot of the price increases we saw were supply side driven. We still have only 2 to 3 months of inventory in most markets. That's a low inventory. Some markets might be 6 to 8 months. And that's normal. but we're at 2 to 3 months in most popular markets. And so with low inventory, low supply means higher prices.
Yeah. So, well, then let's get into, when it comes to pricing, affordability. Will
Right.
affordability attract more first-time home buyers?
Well, the affordability will come in. I believe prices will continue to rise in 2025. I got to say that a lot now. 2025. And what's interesting is that even Fannie Mae, Fannie Mae, Freddie Mac, they raised their conforming limits to over $800,000. And that's almost a 5% increase. So they do that in anticipation of where the market's going. If they believed the market was going down, they wouldn't have raised that up, more than likely. I can't say for sure. I know we were, that's almost double where we were 15, 20 years ago. And so prices have gone up consistently, and the outlook looks good for prices to go up. So if you didn't listen to us 2 or 3 years ago when we said, listen, now's a good time to buy, we weren't lying. We weren't just saying that to trick you into buying, right? We were saying that because we saw the numbers. We saw the inventory, the supply being low. We saw the demand, demand might have dropped, but that supply is so low that it kept prices high.
Yeah.
So it's still a good time to buy, but I don't know what next year holds. If the rates go down, I don't think we'll see a frenzy like we did in 2020 or 2021.
Sure.
But I think we'll see a normal market with normal demand, which means, you might have multiple bid situations. You might have less opportunity for closing costs being paid. You might have less opportunity for, inspections and things like that.
Normal sounds nice.
Normal sounds really nice. Yes.
So if you could give some advice, what opportunities should agents and buyers focus on for 2025?
Opportunities. Well, as rates drop, if they drop, you're going to see more people enter the market. And the opportunities are going to dissipate for things like, concessions, closing costs, inspection, paying for things that were wrong in inspection. You're going to see less opportunities there. Where you're going to see some opportunities is in the, look, you have a new structure for commissions, right? There's some opportunities there to structure a good deal. So deal structure is going to be imperative of how the agents and the clients structure their deal to be competitive, but also make it a win-win for everybody. So that's one area I see a major opportunity for both agents and buyers in 2025. They're going to have to get a little more creative than they did in the prior years.
Yeah. So also with that being said, what major shifts or trends might reshape the real estate industry in 2025 outside of commissions?
Well, commissions is number one. I mean, we had the NAR changes to the
big change for this year.
Big changes this year.
Yeah.
And everyone's still adjusting to that, and they're still figuring out how to get creative with that and how to use it.
Yeah.
And I don't think it's really been, by most agents, I think they're kind of trying to stick to the old ways.
Yeah.
And they're going to miss the boat on an opportunity to help improve their client situation, get more creative on that deal structure to put together really solid deals that are win-win for everybody.
Yeah. Change is hard, but the sooner you can adapt to change, the better off you'll be.
Yeah, and then there's going to be shifts in concessions. I just don't think when we have a more normal market, you're going to see, and we didn't see a huge amount of concessions this year.
Yeah.
But I was talking about that with someone this morning. I was like, look, if a lot of people go right to the price, let's go negotiate a lower, better price. Okay. Yeah. Well, why not keep the sales price intact, keep that list price, let them get 100% of the list.
Yeah.
But then ask for concessions to pay for things like closing costs.
Sure.
Buy your rate down still. Your payment's going to be better by getting those money paid in closing costs versus getting that off the cost of the house.
Yeah.
So the seller gets to go to the party and say, I got 100% of list, and then tell all their friends that I got 100% of list. They usually don't say that they paid certain concessions.
Right.
The buyer gets to say, hey, I got my closing costs paid.
Yeah.
And the agent gets to say, I made full commission.
Yeah. Everybody's happy.
Everybody wins, right?
Yeah.
Don't go necessarily right for the juggler on price because it has a lower impact than getting closing costs paid to help you lower your rate, to better your position, to lower your monthly outlay and interest, right? And then I do believe there's going to be shifts when the rates go down. I do believe that's going to happen, as well as supply. The rate shift's going to now free up people saying, look, I know I'm a 3% interest rate. 7, I don't want to go out there for 7, but if it's 5, I might sell my house and I can understand paying off my debt, leveling the playing field for myself and buying another house at 5%. 7%, I don't know if I want to do that. 5, I'm willing to, make that just for the house I want.
Right.
So I do believe we're going to see a shift in supply, but that supply is going to get gobbled up by the people that were on the sidelines waiting for the last couple of years that told us we're waiting for rates to go down.
Yeah.
Then it was we're waiting for the election. Now it's
Yeah.
we're waiting for the new year to see what happens.
So now all of those things are over,
All those things are over.
or
It's
very
time
soon to be over in a couple weeks.
yeah.
Yeah.
It's time to buy.
Yeah. Time to buy.
Time to buy. Well,
Awesome.
it's always a good time to buy. Let's be honest. Because if you need a place to live,
Yeah.
why pay rent?
Couldn't agree more. Well, that's all I had for you today.
Oh, that's it. Well,
Unless you have any other special predictions.
Well,
Any other
I do
tidbits?
think 2025, we're going to get back. I would love to see us get back to a normal market.
Yeah,
Right.
agreed.
Might more competition enter the market for real estate agents and mortgage people? Possibly. But that's only going to put the buyer in a better position. And, the cream rises to the top. The good agents will do more business. The good mortgage companies will do more business.
Yeah.
The good clients will get a better deal. And everyone, it's a win-win. If you have that kind of outlook. But I do believe 2025 we're going to get back to normalcy, which would be very nice, and we're going to have a more of a competitive market out there, and we're going to see rates potentially drop, hopefully in the 5s. I'm saying hope now. Last year I said we're going to go into the 5s, and I was wrong. Well, we did. To be fair,
Not completely wrong.
not 100%, about 90% wrong, because we did have a stretch of time where rates did dip down, but
They
we're
did.
going to see that more as a norm and more as a growing trend in 2025. And we hope to see you around. If you're not a subscriber, please subscribe, like, share. You're going to love what we do in the new year in 2025. We're committed to this podcast. Hopefully I won't eat my words on that. And we'll see you next time.